Welcome to the Blockchain Real Estate Podcast, sponsored by the Blockchain Real Estate Summit. Don't forget to mark your calendars for the Blockchain Real Estate Summit 2025, happening online from September 23rd through the 25th for our worldwide audience, with over 50 renowned real estate and blockchain experts and academics representing over 30 countries from around the world. Visit blockchainrealestatesummit.com for more information about the event and to subscribe to our newsletter for the latest updates on innovations in the blockchain and real estate sectors. That's blockchainrealestatesummit.com. Enjoy the show.
Hello, everybody. Welcome again to the Blockchain Real Estate Podcast. We have a really exciting guest here today. It's going to tell us about the latest and greatest project on the Solana blockchain. But what's really cool is they are into real estate tokenization and real estate assets, real estate marketplace, and we're going to see what else they've been up to. But before we start, I'd like to, as always, remind people that this is not financial advice, this is not legal advice, this is not accounting advice. Our program today is sponsored by the Blockchain Real Estate Summit. The Blockchain Real Estate Summit, if you go to blockchainrealestatesummit.com, you can get your tickets for 2025. That's happening September 23rd through the 26th, 2025. You can also get the replay from 2024, which includes bonus content from our previous blockchain real estate summits. We're very excited about a lot of the great guests that we've got there, and we want to continue to bring you education about new projects, new ways to invest in real estate on the blockchain, and new ways to create wealth. With that, I will introduce Darren Carvalho from MetaWealth, talking about creating wealth. And Darren's from MetaWealth.co. And as I said, they're the newest project. Well, I shouldn't say the newest because I don't know that, but they are on the Solana blockchain, which is one of the hottest things going right now. So that's kind of why we wanted to talk to him and also see what kind of project they're building. So with that, Darren, why don't you give us a little bit of introduction, how you got into real estate, how you got into blockchain, and why you think this is the way to go for investing in real estate.
Yeah, absolutely, Michael. Very good to be here. Very excited to talk about all we're doing at MetaWealth and also learn more about what you're up to with your podcast. But yeah, by way of introduction, I'm Darren Carvalho, one of the co-founders of MetaWealth. My background really started off more on the technical side. So I went to University of Toronto Computer Science. After that, I did do a master's in business from another Toronto area business school. From there, I went on to join a big bank, Toronto Dominion Bank. Worked on their AI platform for about 6 years, deploying about 40 use cases around the bank. Really touched every aspect of financial services, from trading to marketing to next best offers, all of that kind of stuff at a very technical level. And then from there, I joined Goldman Sachs, from there, where we were focusing on diligencing AI companies that we would eventually invest into. So supporting both GS Growth Equity and Goldman Sachs IBD. And then from there, I started MetaWealth with my two co-founders, Amr and Michael. Amr is, I met him at University of Toronto Computer Science. So I've known him for 15 years. He went the startup routes right away. Joined a startup called Meta that was eventually acquired by Mark Zuckerberg, and he changed the whole thing into Meta. So that was pretty interesting. He had a startup that was in Techstars, and then also another one that was in YC. And then he joined MetaWealth with us. And then Michael is a 25-year real estate private equity guy, so he's kind of bringing that angle to our business. And yeah, so you put us all together, as a big Venn diagram, and put us in the middle there, and you get MetaWealth. And at MetaWealth, what we do is we take institutional grade real estate assets. So we won't do one house or one apartment at a time, tokenize it or anything like that with what some of our colleagues are doing. But what we will do is we will take a block of 30 apartments, a floor of a hotel, an office space, strip mall, things of that nature. So large assets that even a high net worth or a family office would have a hard time dealing with or getting their hands on or raising capital for. We tokenize that, and then we sell that on our mobile and web app to a whole plethora of different customers, right? So we have a customer base that's really focused on that retail side, so people can get involved on their mobile phone for $100. But also we have those family office and institutions who are deploying larger checks that are just looking for basically origination partners, right? So someone to go out in all corners of Europe, find the best deals, manage the best deals, and eventually just reap those benefits of real estate investing, right? So yeah, that's kind of MetaWealth in us in a nutshell. But happy to dive in on the call today.
Well, we can't pass up the fact that you have a partner that forced Zuck to rename his company to, when he acquired it. So,
Yeah,
that
that was
that
a big feat.
that's quite a win there. So, that's probably what I would have led with, but
I know that is quite the story because I think like the startup that he was at, Meta, before, I don't think there's much to it now. I think it was acquired just for the name. Like that's a good name and it was a good story.
that's nice. That's nice. So, and anyway, your background is in technology and financial products, correct?
Correct. That's
So,
correct. Yeah.
and is the platform MetaWealth only for real estate, or do you do other alternative assets?
Right now, we're pretty hyper focused on real estate just because we thought that, like, especially like the beginnings of the company, we really wanted to dial down on a niche, and real estate happened to be a niche that we knew really well through some of the co-founding team. Um, so our ability to offer basically like instead of like tokenizing real estate, we're actually tokenizing our knowledge here. So normally like we could go out and basically start a fund and do this real estate and generate our yields ourselves and profit from that. But that wouldn't be like a novel concept, right? So on our kind of idea and what we're doing, we're basically taking these real estate assets that are once like very hard to capitalize or very hard to assess or analyze or manage and all of those different things, and actually tokenizing that whole value creation in that process and giving that to our customers. Similarly, as we grow, we definitely want to become basically the wealth management super app, right? So there's a lot of like in the past talk of financial super apps and Robinhood taking on so many different aspects of finance. But on our side, we're really hyper focused on wealth management and alternative assets and becoming the super app out of those industries, right? Which I don't think there's a huge mega behemoth there today.
There's a few of them out there, but they're not blockchain based. They're
Correct.
primarily in, and then the other problem with a lot of those apps is they're restricted to certain countries. Like the majority of them
Exactly.
are in the United States, and there's a few of them that are breaking barriers now. But the big problem is that it's hard to access really good financial products in certain places in the world. Um,
Yeah.
so, but let's talk a little bit about because you kind of rushed over the fact that you're not necessarily creating real estate investments. You're creating like a real estate wrapper financial product that people can.
Right.
It's easy access. So can we unwrap that just a little bit more?
Yeah, for sure. For sure.
So that because you went too fast through how you create value. So I want you to explain. So why don't you take like something from your platform and just explain how if somebody invested in it, and again, this is not financial advice or anything, but the
Mhm.
process of investing in it, what type of value they get out of that from going through in using the MetaWealth.co platform.
Yeah, absolutely, absolutely. So it really starts off through like a process that we've mashed out and we've actually like put into place with our teams, right? So internally within MetaWealth, we do have a real estate asset acquisitions team. This team is actually going out, scouring the market, boots on the ground. They're looking at different assets. They're looking at capital cities that we prefer, we like, that we see value in. They're looking at asset classes, so whether it's residential, luxury, office, strip malls, like that kind of nature. And then they're actually going out and negotiating with developers, right? Because we're going in and we're talking to developers and we're saying, hey, we're the MetaWealth platform. We're going to be offering you basically a distribution channel that you didn't have access to in the past ever as a developer. We're going to be buying 30 apartments or 50 apartments or 100 apartments at once. So basically, the developer is only doing a transaction with one entity for maybe 25-50% of their stock, which is a huge win for them. We're able to then negotiate a bulk discount, right? So we go in and we immediately say, okay, we're taking 30 apartments, but we want 10 or 20% off list price. That's usually where it lands, somewhere in there. And the developer, if they're able to sell 20-50% of their stock in a single transaction, 10-20% is nothing. That's an amazing deal for them. So immediately, right away, this is kind of a value that we're automatically delivered to our investors, right? So that day one from their investment, they're already getting this 10-20% profit on their purchase. From there, we then do the whole process A to Z of a real estate transaction, right? So we do the asset management, we do all the contracts, we do all the legal, the finance, the accounting, the money movement, all of these different things that come with a real estate investment. We package that all up. We put it into essentially an SPV. We have different legal structures in the back end of how we do it. And then we tokenize basically this SPV. We offer our tokens on our platform to our investors. And from an investor standpoint, the way it looks is they enter the MetaWealth platform. They have to do KYC at this point. We're working on ways to maybe get around that. But right now they're fully KYC'd. They're able to go and look at all the assets that we've diligenced ourselves. So some of them are from Italy, some of them are from Greece, some of them are from Romania, some of them are residential, some of them are hotels, right? And they're able to kind of pick and choose, and not only pick and choose, they're able to maybe choose 2 or 3 or 4 different investments that they want to actually look into.
Yeah, so they can diversify their portfolio a little bit too.
Exactly. Yeah. So instead of saying I'm going to go buy, I don't know, maybe someone's from London, they're going to buy a condo in London, which is these days maybe $1 million. So they can need 200,000 pounds down. And they're going to buy that one condo in London. They can actually instead go to the MetaWealth platform, take those 200,000 pounds and spread it over 5 properties across Europe, maybe. And that's a much healthier option for the portfolio overall. So they go into the MetaWealth app. They're able to look at all of the we call it the document stack. So they're able to look at materials that we've created. So we've created things called the investment projections, the market opportunity, the asset overview, and then also third-party documents. So we have a legal prospectus from our law firm that looks at the property in the deal. We also do a third-party Collier's valuation on all of our properties, so that none of the numbers are coming from our mouths; they're actually coming from our third-party valuators' mouths. And then they're able to actually see all this information distilled on the app itself. So not everybody can go in and look at 5 or hundreds of pages worth of documents of legal due diligence, but they can kind of understand it when they're scrolling through the app, right? So we make it super easy. We have dynamic calculators. We have all these different things to make it easy. And then once they've made that decision, they go ahead and click buy and basically fund their account with basically an on-ramping solution. So we use Transact in the back end, but basically any credit card, any bank wire, pretty much any way that they want to get money on the platform. They on-ramp their money, and then they click buy and they invest their, anywhere from 100 to people are doing hundreds of thousands of dollars on the platform into these assets.
Can we take a short break here to
Sure.
because right now you're talking about how they get on and invest in the assets. So pretty much anybody in the world can come and invest in these high quality assets on your site, correct?
That's actually the goal. So right now, it's actually because of the regulatory regimes that we're following. We are selling a financial security. So we're hyper focused right now on Europe. So anybody in the EU EU zone, Switzerland, or the UK.
You've gone through the Mika thing and all the rest of that.
Yes, exactly. Okay. Yeah. So we just acquired a VASP license. We are like a regulated crypto company right now.
Okay.
And then we are looking for a US expansion somewhere over the next 12 months. So that's kind of the goal for us.
Well, I think things got a little easier now.
Yeah, that definitely brought up our roadmap for sure. Yeah.
What about Canada? Since you're originally from Canada, is that on the
Yeah, so
roadmap?
Canada is in the same way. We are able to actually process transactions on a case by case basis right now if we do the KYC manually.
Mm.
But we are looking to do like kind of full rollout in Canada as well. Obviously, as all the co-founders are actually Canadian.
Right, right. Very nice, very nice. And then the reason why I kind of interrupted you right here is so pretty much people can come in a euro, and you said they can come in from fiat and things like that. Does their money get converted into a MetaWealth token, or does it go directly into a token from the individual
Yeah.
property?
Well, two things here. The first thing is that the whole platform is built on USDC. So
Okay.
we are like a Circle affiliate company. We're applying for our Circle minting partnership, and we use the Circle programmable wallets actually in the back end too. So the full, MetaWealth is a Circle company, I would say. Secondly, in terms of
I'm going to interrupt you again. If somebody comes in Canadian or comes in from
UK,
Eurozone, that
yeah.
gets converted into a dollar.
Yes, exactly.
Okay.
So
Okay.
yeah, USDC, like one
Yeah,
USDC.
dollar
Correct.
stable coin. Well,
Yeah.
sometimes people listening to the podcast aren't, really familiar with some of
Okay.
the
Yeah,
stuff.
it's a
So
dollar. Yeah.
I try to make it as simple as possible so that somebody listening could say, "This is a great idea. I got to go over there
Yeah.
and do that." So, but anyway, I interrupted you in the middle of the onboarding. So we now know that people have their money and they get it into the platform. And then what's the next, step from there?
Yeah, so once their money is on the platform, that's when it comes super simple, actually, right? So we do have another feature called wallet to wallet transfer. So if someone had like USDC or their cryptocurrency somewhere else, and they wanted to use that money to invest in the MetaWealth platform, they could use this wallet to wallet transfer feature that we have. So in the same way, they're basically onboarding USDC to the MetaWealth app. And then from there, they're able to browse all of the opportunities that we have on the platform. And then there, it's kind of like a 2 to 3 click process, right? So you go in, you click buy, you specify how many tokens that you would like. Each asset, so we call it asset packages. So an asset package is like these 30 apartments in Spain will go into asset package one. These 40 apartments in Greece will go into asset package two, right? So we call them packages. So they're able to kind of view all of these packages on the MetaWealth app. And then each package has a token that's associated with it. So you can think of it like I have one token in asset package two. I have 10 tokens in asset package one, right? And then basically they would go into the specific asset package they would like, and they press buy and finish the process there. So technically, there is no overarching MetaWealth token. So it's not like it's a fund or a REIT or anything like that.
Okay.
We're bringing people as close as we can to being an actual real estate landlord. So they're able to pick and choose. Like, someone could be from Greece living in London and say, I want to buy a piece of home. And they can go in and buy specifically in Greece and specifically in, I don't know, Athens, and purchase a piece of property there, right? And that's our goal. It's not to say you're buying little pieces of property everywhere with one token. That's not what we do.
Right, right. Well, and that's important because I've seen a lot of projects come on and there's issues because people have to invest in their token and their
Yeah.
token doesn't have a whole lot of liquidity. So
Yeah.
if you just, eliminate that, there's a whole lot of liquidity in the US dollar. So, that's
Yeah, I mean, I think, just on the point of liquidity, right? That's a really good point. And I think if you look across the board, right, look at any RWA project, like, leave real estate aside or include it into the mix. I think liquidity is one of the biggest, barriers of scale in this industry right now, because there's people that are super interested, but they're like buy and hold kind of people, and they're not really like looking at secondary markets. And there's a behavioral kind of aspect going on here. So at MetaWealth, we have kind of like different ways to solve liquidity on our rental assets. So assets that we're actually like renting out to tenants, and tenants are paying us back, and we're paying the yield back to our users. They have what we call buyback periods. So every quarter, we have a week where there's a buyback period where we'll actually take back tokens that people, let's say, want to exit from. We'll sell them to new investors eventually. And then we have a second strategy, which is called pre-construction. So this is where people are basically investing in real estate in lockup periods. So it'll be a 12, 18, or 24-month lockup period, where at the end of that lockup period, everybody exits with the ROI that we advertised at the beginning.
So
And
just
this
to clarify, the pre-construction, that's a development deal and not an
exactly,
existing deal? Okay.
exactly.
All right. So can you drill
Yeah,
down on that a little bit more to explain
yeah,
why
sure,
there's the
sure.
lockup period?
So as an example, right, like leaving blockchain aside, pre-construction deals are quite normal, right? Like basically, a developer is putting up a 500 unit building, and 5 years before they even break ground, maybe they're or no five not 5 years before the building is delivered, before they've even broken ground, they're selling the units, right, for 20% down, and then maybe you pay every 90 days a little piece more of that ownership, right? Um, so we're kind of really interested in those deals because the yields are quite good that we can get from that. For those deals, we can kind of offer between 7 and 10% ROI per year, which is very attractive compared to our rental asset deals, which is like 6 to 8. So it's a little bit lower but less risky.
Mm-hmm.
But going back to pre-construction, typically what that means is that at least when we're coming in, 12, 18, or 24 months before delivery date of the apartments. And that means that like, those 12, 18, and 24 months before, that's when we're raising for the project to basically have that capital appreciation over time, right? So
Right.
we know that at the end of those time periods, we're going to be able to exit in the real world, the actual units, and pay back our users. So that's kind of why the timing just lines up exactly with that.
Yeah, and so you're providing two separate types of value creation. With the development, the value creation is the developer takes a raw piece of land or
Correct.
an existing building, converts it into something else. And so the value creation is the new thing that comes out of that. And then it either
Right.
gets financed out or, the tenant takes possession. And so, it gets sold out. And then the other value creation that you're creating is the existing properties that have existing rent. And so
Correct.
you're creating the value creation by number one, you said you buy at a discount because you're buying at a larger, package size. And number two, you're providing, a cash flow. So that's the value creation there. I'm assuming that there might be some sort of, you know, uh, appreciation sometimes too.
Yep. Appreciation is kind of on both the deals, but that only happens upon exit, right? Or when we're doing a buyback. So what we do is like during any of these events, we'll have a Collier's valuation on the today value of the property, and we'll exit that way.
Okay. And speaking about valuations, I know a lot of funds and our fund it does it this way. We had like quarterly net asset value. So somebody came in and would like, just give an idea of net asset value or
Yep.
at least a yearly net asset value. How do you do that? Or
Yep.
you just provide, financial statements and what's the reporting?
Yeah, so on our side, what we try to do, so we offer quarterly reports on all of our assets. So that's just a staple across the board that our internal real estate team is doing. So like, any developments in the area, how the renting is going, are there any problems? Is there any evictions? Just general stuff.
Right.
And then in terms of the actual, formal valuations that we're getting, we're doing it every 6 months with Colliers. So every
Okay.
6 months, we're basically updating the token price with the Colliers valuation report, and that's something that we don't want coming from our team, right? Like we don't want
Right.
to say that we're controlling the valuation of this property. Nobody really knows what it's worth. We don't want that. What
Yeah,
we
and
want is
Colliers is a third party appraiser or,
exactly, yeah,
valuator, just so everybody knows. And Colliers is a large, real estate firm that's worldwide. And so they're
exactly,
a pretty well-known name. And so it's it's not this, but it's kind of like, an accountant coming in and giving an independent judgment. But
Exactly.
appraisals are open to interpretation too. So I just want everybody to know that sometimes appraisers are wrong, but for the most part, it's a great thing that you're doing that because it's somebody that's in the market that knows how things
Yeah.
are trading, and they can get an idea as to what reality is.
Well, they also produce like a 50, 60 page report. So we're paying like, basically a hefty fee to get this done,
Right,
but it's a
right.
50, 60 page report on A to Z, like the country, the city, the community,
Yeah, no, I'm
comparable to
not
the,
discounting. I'm saying it's like,
yeah, yeah, no, no, absolutely.
a really good thing that you are
Yeah.
doing that. But having worked with appraisers for the past 30 years,
They're not always right.
well, it's an art form. And
Yeah,
and then there's different things that can impact the market. If
for sure.
there's 2008 when there was no
Yeah,
financing,
absolutely.
things locked up. So,
Yeah.
but with the token thing, I think that's going to solve some of that because there's going to be number one, wider pools of liquidity worldwide, and I think number two, you're going to have other options versus just being in a paper syndication.
Yeah, no, absolutely, absolutely. I totally agree.
Yeah. So, what's the next step? If it is, are the tokens that are the cash flowing tokens, is there a lockup period for
For
those
those
or
ones, it's a 6 month lockup. So basically, like as soon as you make the purchase, it's 6 months till you can be eligible to participate in the buyback programs. Very soon, we'll be launching basically a peer-to-peer secondary market for these tokens. So basically, at any point, someone can go ahead and list their token for any price. We'll have a recommended token selling price based on the Colliers valuation that we'll do every 6 months. But someone can say, hey, like, I think this is a hot property. I'm going to list it for 10% above the recommended token selling price, and then someone can scoop it up. So yeah, so like in terms of the exit strategy, that's kind of where we're taking it for the rental asset strategy. In terms of the pre-construction, we're thinking about different ways to do this. Right now, we have a matching program. So if someone absolutely needs to exit, like if they're in an emergency situation, we also do have an investor relations team, so they can kind of take on some of these sales because they're already selling data every day to institutional, family office, and high net worth investors. And they'll take some of these, and like some people prefer like I wanted that rental asset strategy that you guys did a year ago. Get me in if there's ever a time, and sometimes we do have wait lists for these tokens. But yeah, between the two asset strategies and exiting, that's kind of where we've been at. But to be honest, like at the end of the day, this is real estate, right? We're not trying to create an environment where people are day trading on real estate and all of the intricacies of that. What we really kind of recommend when our investors come in is that think about these investments as a 5-year hold. Like that's where you're going to get the true value of real estate. Just because we're putting real estate on the blockchain does not change the fundamentals of real estate. So we're doing a little bit of a balancing act here. Of course, there's several benefits to investing through our technology, such as like cross-border investments and ease of liquidity and paperwork, ease and all of that stuff. But at the same time, like we don't want people to expect like the meme coin bump on real estate. That's not going to happen here.
Oh man, you know what? I thought this was going to be like, you got a beautiful development in Spain and it was going to be the next fart coin. So,
Yeah, yeah, no, it doesn't go up by 1,000 times. That's not how it works.
but so that brings up the next thing. The the lockup period, is that a regulatory thing? Because I know in the United States, and I can't remember what the MiCA regulations were, but in the United
Yeah.
States, it's a 1 year lockup period before they can trade from accredited to non-accredited investors. And it's a 3 month lockup period that they can trade accredited to accredited. So is that a regulatory thing or is it more
On
investor protection?
on our side, it's more investor protection and upholding like basically the integrity of the token itself.
Hmm.
So that's really all it is. We didn't have any directive to follow in terms of regulatory reason as to why there would be a lockup period. So no, it's just kind of on our side. We need to basically not control the secondary market, but we need to put some guardrails in place just to make sure that nothing funky happens on that side. And also we have to manage the liquidity, right? We have to make sure that like there's enough supply and demand to meet the needs of our investors.
You don't want a real estate rug pull.
Exactly. Exactly.
Okay. Then my next question is, because I actually didn't ask this at the beginning, are all of these projects like eligible to anybody, or do you have to be a sophisticated or accredited investor or somebody that has a certain net worth to invest in them? Or is there certain projects that anybody can invest in, or in certain projects that, unfortunately you do need to be an accredited or sophisticated investor?
Yeah. No, on our side, so like in the back end, we have a couple of different legal structures. So one of them is called a PPL. It's a profit participatory loan. The second kind of structure that we're working with right now is actually a bond. So it's a real estate bond. And then in the past, we've done a different SPV route. So basically tokenizing the SPV itself. With all of these structures, we're able to get the minimum entry down to $100, and it doesn't have to be to only accredited investors, luckily enough. And when we're assessing these solutions, it's really because we truly believe in the vision of this technology being democratization of these amazing, large institutional grade assets, right? If like that's kind of like why when we're looking at these regulatory structures, we always keep that in mind, and we want to keep that available to everybody. Although like there's definitely a huge value prop for the super high, high net worth, and obviously there's a totally different super high value prop for the retail investor, right? So we do our best to level the playing field.
Right. Okay. And so now we're going to get to the reason why we were brought together, the Solana blockchain.
Yeah.
And speaking of, meme coins and everything, we know that right now that's like the hottest thing. So hopefully
Yeah.
you're going to get your real estate meme coin going too. But how did you decide on the Solana blockchain? What would,
Yeah.
went into that decision? Because right now, even though it's a hot blockchain, there's not a tremendous amount of real world asset projects on the blockchain.
Yeah. I mean, there's a ton of reasons why, I would say. We originally, when we started building the product in 2022, we started on the Ethereum blockchain. So we built everything, everything A to Z was on Ethereum. We were happy, like, there was nothing, I mean, the whole thing worked and it was super secure, and, funds were safe. That's table stakes, right? Like, if that couldn't happen on another blockchain, we would have never moved. But in terms of the Solana angle, it really came down to a couple different things. So on the more technical side, transaction fees for us, like we cover all of our gas fees that we always have for our users. So obviously that's a huge cost savings for us when we're doing it on Solana. The
Especially if you're
speed,
doing it on ETH.
exactly. Yeah, I know. It hurt the business model quite a bit actually.
Right.
And then the second thing is the transaction speeds were much better. So that's obviously a big plus. And then on the other side of it, it's the actual community and foundation aspect. So in terms of the community, the retail aspect to Solana is something that we really liked. We did do like an 80-page perspective, internal prospectus on the blockchain. We looked at like all of the negative and positive events in the past and made sure that from a security standpoint we'd be fine, and everything checked all the balances there. But on the retail side, like the community of Solana is very strong. They always come together. Like the Breakpoint conferences are quite something. They're huge. And that was kind of like a very warming fact for us. And then the third thing was really the foundation. So the amount of foundation support that we've got from even before we moved, like when we were making this decision and all of that is insurmountable. So we're able to get access to a lot of different institutions through the foundation. We're sponsoring events alongside the foundation. We're going to all of these different kind of like key opinion leader discussions around the technology. And we were able to actually be one of the first successful real estate tokenization platforms on Solana. So now, like, when we're probably why we were connected, we're being pulled into all of these conversations as like an expert, subject matter experts, right?
Right, right.
And that's a big thing for, like, when you're building from the bottom as well. And all that to say, like, we've become like quite a strong platform now. We're quite a big team. We've done a lot of real estate assets, and we're definitely a market leader in the space, right? So I definitely like can't thank the Solana Foundation enough, but also very thankful for where we've gotten with all of our team's hard work as well.
Yeah, no, and that's great. I'd like to ask you a little bit more because I'm interested in the community of Solana and
Yeah.
how that's worked for you, because I'm an advisor to several, projects, including a few AI, token launches. And so
Yeah.
wanted to know, how much retail support you've gotten on the platform from the Solana community.
Yeah, we've gotten a lot. So like there's different ways to go about it, right? So one big thing that I think was super visible right out of the gate was events. So we participated in a lot of different Solana events, both on stage with booths all over the world. So we were at London Hacker House, Dubai Hacker House, Alt Investment Summit in New York, Solana Breakpoint in Singapore, and we were basically front and center at all of these events. Where if you think about eyeballs on your booth, you're talking about, I don't know, tens of thousands, maybe up to 100 grand or something like that. So that's obviously a huge aspect. And in terms of like content, so they've actually, like, across social media, they've done like professional documentaries on us. They've included us in different like speaker panels that they're basically blasted all over social media. So probably, I don't know, hundreds of thousands, if not millions of views there. Um, and then through partner networks, so we're dealing with a lot of different partners now, especially with a different protocol we're building. We're able to basically mix and mingle user bases with a lot of different Solana products. So that's another kind of aspect to it. So if you add all these things up, and I'm sure there's more in the background that I'm forgetting about, but you're talking about like millions of eyeballs on the MetaWealth platform just through the foundation alone. That's aside from the normal marketing that we do on our side.
Right. No, so that's, one of the reasons why I was interested in learning more about Solana, because like I
Yeah,
said, ETH has been the go-to thing, and there's a few other blockchains out there
yeah.
that have, pushed specifically RWA. But, I was interested in learning more directly about you guys and Solana and all the rest of it.
Well, one other thing I'll say as well is that specifically around RWAs, and even I know like the AI space, like AIX blockchain is, or AIX crypto is pretty hot right now too. Um, Solana, I feel, has like specific, I know, like pillars of the industry, I guess you could say, that they're going after. So if you're like on one of these pillars, I think they're doing everything they can to basically push you as hard as they can as well. Specifically because, like, let's say, knock on wood, RWAs really picks up in 5-10 years. If they didn't start today kind of doing this stuff, they would be just playing catch up, right? But I think Solana, they take a different approach. They make their own bets, they make up their own mind, and then they push as hard as they can, and that will make them in those 5-10 years leaders in the space rather than followers, right? So it's a
Well, I
different
believe
mindset.
RWAs are going to catch on a little, sooner than 5 or 10 years, but
Yeah, yeah, no, I agree as well. I'm just saying they're going to be leaders in that time for sure.
yeah, I've been in it since about 2019, so
Okay, you
it's finally
understand.
it's finally happening. So, but
Yeah, yeah.
so with that, I think we've come, to the end. I'd like to wrap up a little bit, and just if anything we haven't covered, if you want to cover it here now, why don't you go through that? Otherwise, I'd like to, you to tell the people how to get in contact, get interested in the MetaWealth platform, and anything else that you'd like to promote right now.
Yeah, sure. I think one big thing on the product side that we're unleashing pretty soon is called the AUM Protocol. So I think across different RWA companies, everybody's trying to develop their AUM, right? And as I said in the past, like with RWAs, we see the key problem or the key kind of hurdle that all these companies have to overcome is liquidity. So we're building up a protocol that can be used by any RWA project to basically unlock liquidity for their projects. And the way that we see it is it's a community project. So we're leveraging all of our network, all of our RWA project networks to basically come together and unlock liquidity for all of our users and the community. So that's something that would be something to look out for. It's called the AUM Protocol, so you could definitely check that out after.
Well, Darren, we're
Yep.
I'm gonna interrupt you right now. We're gonna
Yeah,
have to bring someone back on from the AWM platform
absolutely.
I'm sorry, AWM Protocol to talk a little bit about that once you guys have a minimum viable product up and running.
Yeah, it should be pretty soon. But that's something to look out for. We definitely should do another session because it's a huge initiative, and we have support from the Solana Foundation, so it's going to be a pretty big one as well. In terms of where everybody can reach me and the team, so we're pretty much on all social channels. Usually the tag that we're on is just MetaWealth. Website metawealth.co. My personal Twitter is Darren M. Carvalho. And yeah, that's pretty much it.
Is there a MetaWealth Twitter and a
Yep.
MetaWealth so so
It's all just MetaWealth.
Okay, perfectly.
Yep.
Perfect. All right, so that's MetaWealth.co, and if you can remember it, because one of the founders is the guy that forced Zuck to change the name to Meta.
Exactly.
So,
Exactly.
MetaWealth.co.
Exactly.
So Darren, I really appreciate you coming on. It's been great to talk to you. Thank you for listening, everybody, and thank you for the Solana Foundation for connecting us with the MetaWealth and Darren. Just want to remind everybody that if they go to the blockchainrealestatesummit.com, that's blockchainrealestatesummit.com, we have the 2025 Blockchain Real Estate Summit coming up September 23rd through the 26th, or they could get the replays. The replays are fantastic because you can really get an entire global knowledge of what's going on with real estate and RWAs, and we also cover oil and gas and a number of other alternative assets and the world of tokenization. Plus, we have some excellent research and development people and educational people. So with that, again, none of this has been financial advice. You need to do your own due diligence. You need to get your own attorneys. You need to get your own accountants, and you need to get your own people that can consult with you and give you direction. But Darren Carvalho from MetaWealth, thank you very much for joining us today.
Thank you, Michael. It's been a pleasure.
Thank you for tuning in to the Blockchain Real Estate Podcast, brought to you by the Blockchain Real Estate Summit. Don't forget to mark your calendars for the Blockchain Real Estate Summit 2025, happening September 23rd to the 25th, online for our global audience. Secure your tickets today at blockchainrealestatesummit.com/registration. If you enjoyed today's episode, please follow the Blockchain Real Estate Podcast on your favorite platform and leave us a review. Your feedback helps boost our visibility and allows us to reach more listeners like you. Have a guest in mind you'd like us to interview? Let us know by leaving a comment at blockchainrealestatesummit.com. Thanks again for listening, and we'll see you at the summit.
Adam Carswell, the voice of liberty. This podcast is solely intended for informational and entertainment purposes only and is not intended to provide tax, legal, investment, or accounting advice. You should consult your own tax, legal, accounting, or investment advisors before engaging in any transaction or undertaking. Thank you for listening to the Blockchain Real Estate Podcast, which is a part of the Blockchain Real Estate Summit Network. Go to blockchainrealestatesummit.com for more information, free reports, and giveaways with free stuff. Thank you.